Hello Gr10s, we are continuing with Sole Traders adjustments. Now remember, last week I gave you some study work to do. I hope you went home and you studied those steps for the closing transfers. We're going to look at the closing transfers today and do a full activity on the closing transfers. But remember, before we got to the closing transfers, we looked at depreciation. Now again, what is depreciation? I want to quickly go through firstly the cycle so that you know where depreciation fits in during your year-end procedures, and then we're going to again look at how to calculate depreciation, what is depreciation, why we need to do it, all those nice things. So let's quickly look at your cycle. So very first, we will have your pre-adjustment trial balance, and this is all the amounts that all the things that happened during the year. So this will be the amounts up to before adjustments. So pre-adjustment, before adjustments. So all the amounts there will be not your final amount. Some of them might be, but not all of them, because we still need to calculate a few things and bring a few things into consideration at the financial year end. Now, what do? We're going to do all these adjustments, and we started off about 2 weeks ago with all these adjustments like your bad debts and your income received in advance and your accrued income, your prepaid expenses and your accrued expenses. We looked at stock that is in hand, and we looked at your trading stock deficits, all those things that we pick up at the end of the year that we didn't put through into this year's books yet, or that things are in my books now, but it's actually only for next year. So hopefully you can remember the Gr10 principle of matching. I need to match all income and all expenses to a specific financial year, any consecutive 12 months. But I named a few of these adjustments. We're going to look at the very important one, depreciation, a bit later on. Then after these adjustments, you'll do a post-adjustment trial balance, after all the adjustments, and then your study work that you had, your closing transfers. Now remember, these closing transfers, what do I say? I say close off all nominal accounts. All nominal accounts meaning your income and all your expenses to certain accounts to calculate a few things. You need to go calculate your gross profit and your net profit for the year, because that's why business owners start businesses, and why sole traders start a sole trader business, a one-man show, because they want to make profit. Now, all of these nominal accounts will go to either the trading account or to the profit and loss account, and these are your two final accounts. Now remember, your gross profit will be calculated in your trading account. That will be your sales and your cost of sales and your debtors allowances. As you've studied, that will go to your trading account, or your net sales, if I can just say it like that. And then your profit and loss will have your gross profit in it, which will be called trading account, because you normally start a business and they trade with goods, so they buy and sell. And then these businesses will have a lot of other income and expenses that you need to list for operating this business. Sometimes they'll have financing expenses like your interest expenses on loan, interest on a mortgage loan, interest on creditors. All those interests will be financing, and then you'll have your investing income from your interest on fixed deposits, your interest on a savings account, etc. But after these, we need to do a post-closing. After you've done all the closing transfers, you'll have a post-closing trial balance, and we'll look at that in the near future as well. But depreciation. Can you remember what depreciation is? Remember, your depreciation is calculated at the end of every year on equipment and vehicles, because they lose value. Now guys, the more we use a vehicle, the more you use a cell phone, the more you use a laptop and furniture, they get old. So the older they get, the more value they lost, right? So what you need to remember when we do depreciation, that the cost price will never change. Remember, when you buy a cell phone, you paid 5,000 Rand for that phone. If I ask you 10 years down the line, what did you pay for the phone? You would tell me that you paid 5,000 Rand for the phone. And we will keep that 5,000 Rand in the equipment account. So the Gr10 principle you use is the historical cost. But now, you can't say after 10 years that that phone is still worth 5,000 Rand because you lost value. And therefore, for every year, you'll calculate a certain depreciation on it. So you'll decrease the value of that phone in your books because you need to be prudent. You can't tell everyone that you have all these assets, but they're not really worth the original cost price because you lost value on it. Now, what do I do? There's two different methods that we're going to look at. And these two methods we did cover yesterday. Just want to quickly go through the notes so that you go and refresh your memory. Remember, all assets, except your land and buildings, will decrease over time. The two methods we do use. They decline in the market value. Why? Because there's wear and tear. They get so old and outdated that we can't use it anymore. And think of furniture. If we sit on that same couch for 20 years, the material won't be as nice as when we purchased it. So we do lose value. Now remember, losing value will be called depreciation. And then depreciation is normally calculated, like I said, at the end of the financial year. And then lastly, let's go and look at it. Depreciation is dealt with as an expense. And why is this an expense? Remember, expenses are not always paid. Now, this is a non-cash expense or imputed expense. Why? If I lose value on a car, I'm not going to draw the money and put it in maybe the boot to say this car is still carrying its value. No, we're just losing value, and it's a valid expense. SARS do allow businesses to depreciate their vehicles because it's beneficial for businesses to have new vehicles and new equipment to generate profit in a more sustainable way. They won't have breakdowns, so the cars will be new. They'll maybe have a service plan. All those things play a big role, and therefore, yes, SARS do lose out maybe on tax, but again, when we sell these vehicles, or when we buy these vehicles from the dealerships, there's normally a VAT that the government gets. There's more employment because there's more salespeople and there's more vehicles being manufactured. So that's a thing that you need to remember. Equipment and vehicles are always depreciated. So know that your vehicles and your equipment will lose value. Like I said, land and buildings will not lose value. We'll normally keep land and buildings at the historical cost. Now, we calculated a few things last week. I want to go over them again quickly. Now, the two methods, your very first one, the easy one, I call it the easy one. There it is. We're going to look at it. We can call this method the cost price method, the fixed installment method, the fixed cost method, or the straight line method. And very easy, we looked at how to calculate it. If I have a cost of 100,000 Rand, I need to take that times 20% to get my depreciation for the year. So therefore, your expense will be 20,000. On the debit side, you'll call that accumulated depreciation in your T account depreciation, and we'll take it to the negative asset. So now you are creating a negative asset, and I'll show you how it looks like. You will create a T account called accumulated. So from every year, we accumulate more and more and more. So we'll go up every year, and we call it accumulated depreciation on either vehicles or equipment, and that will go on the credit side because it's a negative asset. Therefore, the asset needs to decrease value on the credit side because assets are normally recorded on the debit side. Now, that's the easy method. Now, remember the other method, method number 2. It's a little bit more tricky, but it's easy if you know the formula. We'll have to call this a few different names. We can call it diminishing, reducing balance method, the carrying value method, book value method, or the declining method. So therefore, declining, depreciating, diminishing, every year we lose more, less and less and less. So in the first year we'll lose more, the second year less, third year less than the second, in the fourth year less than the third, and the fifth year less than the fourth. So therefore we lose every year a little bit less and a little bit less. So that's your diminishing balance method. Now, how do I do it? Firstly, you need to go and calculate your book value. Now, how do I get the book value? I need to take the cost price minus all the value lost, so therefore the accumulated depreciation from all the previous years, and then you'll get the book value, or I can call this the carrying value. Now, just to show you a method, say for example 2, and we are using the same, we're having a cost price, and if we use for equipment, a cost price of 100, and in the previous year, so therefore for year 2, we need to now calculate depreciation. The previous year we lost 20. How much is your book value? Your book value will then be 80,000, as you can see. And then 80,000 times 20% will give you then your depreciation for the year. And as you can see, we have the same cost price for different assets. From the first year to the second year, we do lose less and less and less. And that's what we're going to focus on. So let's quickly go through a nice example again. We did cover this last week, but I want to refresh your memory. Depreciation is so important. You need to know depreciation so well to cover the work that we're going to look at in grade 11 and grade 12. So we are not going to finish up with depreciation this year. We're going to carry on with depreciation up to, if you're going to study your first year, your second year, your third year, depreciation will be there. So know it very well. And this is the foundation of depreciation. The better your foundation, the better you'll be. So let's look at it. At the financial year end, Kia traders, they normally have their financial year end on the 31st of December. So what you need to do is you need to calculate depreciation on the vehicle bought, and you paid 100,000 Rand for this vehicle on the 1st of January 2013. So hopefully you know that the end of the year will be 31 December 2013. You see, that's the end of the year. That is 12 months. So therefore, if I bought it on the 1st of Jan, I use the 12 months up to the end. And when do we do depreciation? We always do it at the end of the year. So calculate depreciation at 20% on what method? It will be method 1, the cost price method, for 3 years. And this is the first year, 31 December 2013, 31 December 2014, and 31 December 2015. And then for we did it. Now, what is the calculation? We always say 100,000 times 20%, and then we'll say 12 over 12, and then you get your 20,000 Rand. So you will lose 20,000 Rand every year. So therefore, your cost, as you can see, will remain the same, because if I paid 100,000 Rand last year, what did I pay for the vehicle this year? I paid 100,000 for it. What is the year that I'm calculating for? Year 1, year 2, and then year 3. And now, do I need to go over and calculate, recalculate? No, I already calculated once, so I don't need to calculate it again, because you have also the straight line method. For year 1, you'll lose 20. Year 2, you lose 20. For year 3, you lose 20. And therefore, you create a straight line for year 1, 2, and 3. And that's why we can call it the straight line method. Now, guys, very easy. Your depreciation for every year will stay 20 bucks. Your accumulated will go up. So every year you lose more, and you lose more, and you lose more. So for the first year, we didn't lose anything but the previous year, because we didn't have it the previous year. So therefore, nothing plus 20 gives you your 20, and then your 100 minus 20 gives you your 80. Now, what did I lose in the second year? Again, I lost 20. But what did I lose the previous year? I lost 20 the previous year, lost 20 this year. So now in total, I lost 40. How much of the 100 did I lose? I lost 40. So therefore, your book value will now be 60. What did I lose in the third year? Again, fixed line, straight line method, fixed installment, the same amount, cost price, 20,000. So in the third year, you lost 20. But what did I lose previous years? Again, I lost 40. So I need to take those, add it up to get what did I lose now for 3 years running? 60,000. And if it was 100 and I lost 60 already, how much did I then lose? Oh, what is your book value? Sorry, what is your book value? Your book value will then be 40, because it's 100 minus 60. That will give you the 40. Now let's go look at the next method that you didn't do with me yet. The next one is you bought equipment. This one, you bought equipment also on the 1st of January, but you paid 20,000 Rand for this equipment. What is the method of depreciating and what rate? So calculate depreciation for 3 years again at 10% per year on the diminishing balance method. Now, the first year is exactly the same as the cost, because we didn't lose anything before. So let's go and look at it. The first year, as you can see, the cost remains the same. For the first year, we need to go and say 20,000 minus nothing, because we didn't lose anything, times 10%, and that will then give you 2,000, and it's 12 over 12, it's 1, we lost. We used it for the full year. So therefore, your depreciation will be 2,000. And your accumulated depreciation will be 0 plus 2. That will give you your 2,000. Now, what is your book value? Your cost minus what you've lost up to now, which is 2, and that will give you your 18,000. Now, what do I do for the next year? I do this calculation. I say 20,000 minus, what did I lose the previous year? 2,000. Remember your brackets on your calculator, times 10%. And now you would see that I lost less. I lost 1,800. So what's your depreciation this year? Your depreciation for the second year will be less than 2,000. It's 1,800. And now how much do I lose in total? 2,000 plus 1,800 will give you your 3,800. And now, what is your book value? 20 minus 3,800, that's the value lost, will give you your 16,200. Now guys, I want to give you the third year to do. Now the third year, you need to go and calculate what is my depreciation, what is my cost, what is the year, what is the total value lost over now all the years, and then what is your carrying value. Now you have all the information in front of you. I want you to do it over your ad break, and then I'll give you the answer after the ad. So see you now. Okay guys, I know you got this right. So let's look at it. The cost will be 20,000 because that's what you've paid. What is your next year? The next year will be 31 December 2015. Then, what did you do? You had to go and say 20,000 minus 3,800, and then you will get your 16,200, and then you can say times 10%, times 12 over 12 because we have the full year, and then your answer will look like this, 1,620. Now what did you lose in total? You have to take your 3,800 plus 1,620 to give you your 5,420, and then what do I do next? I need to go and take the 20 minus what I've lost in all 3 years, which is 5,420, and then you will see that you will get your carrying value or your book value of 14,580. But now, we calculated everything. Now I want to quickly show you how to record everything for a specific year in the general ledger. This is the most important way to record it. So remember, your vehicles will be an asset. It's plus minus and will be always recorded at your cost price. There it is, 100,000 Rand. That's what I've paid, and will stay like that. Your equipment, we've paid 20,000, also an asset, and it will remain 20,000. Now, if you can look, the 2 years that we had the vehicles previously, we lost 20 and 20. So therefore, if you look at your accumulated depreciation on vehicles, which is a negative asset because it decreases my vehicles, because I have 100 on the debit and I already have 40 at the beginning of the year. But how much did I lose the second year? Can you remember what you lost, on the third year? What did you lose on the third year? If you can remember, you will see depreciation will be done at the end of the year, and we had depreciation, we wrote it in the GJ, and we lost 20,000. Now that is your credit entry. Where's your debit entry? Let's go and look at your debit entry. Your debit entry will be in your depreciation. Why will it be on the debit side? Remember, it's an expense, and the expense will be shown on the debit side, but know that it's bad for my owner's equity because it's an expense. Then that's your depreciation on vehicles for the third year. Now, as you go and look at your equipment one, you did depreciation just now over the ad for equipment. And what was your depreciation on this equipment for the third year? As you can see, you have the 1,620 there. But now, where do I record? For every credit, there should be a debit, and this debit will be there. And as you can see, the debit will be shown as accumulated depreciation on equipment. And please look at your wording. Do you see they're partners? The accumulated depreciation will have depreciation in it, and then depreciation will have accumulated depreciation in it, and that's your double entry rule. Now, I just want to show you, this is part of my closing transfers. Now, this is an expense. It needs to close off at the end of the year. Now, how will I close it off? Very easy. You total it. So you total everything for the year. You take it to the other side. There you go. You take it up, and you will now take it to the profit and loss account at the end of the year. So therefore, again, your expense will be on the debit side of your profit and loss account, and you studied this, so you need to know it. Now, let's see if you studied. The nominal account section, remember, needs to close off. What's your nominal accounts? Your income and your expenses. Why do we need to close all of these accounts off at the end of the year? Because I want to go and determine, what did I make this year? What profit did I make? What gross profit did I make? So therefore, very important, all these balances and totals in your nominal section needs to close off to either the trading account or the profit and loss account. And we call this closing transfers. Now, what I want you to do, let's hope you studied. I want to give you 2 minutes to list all the steps when you do closing transfers. Start at the first one and then end at the last one. And there's a specific format that you need to use. Use the steps, makes it a lot easier. If you studied it, you'll fly through it. So 2 minutes. Okay guys, let's see if you studied. Now, the very first step, you need to take your debtors allowances, your expense, your debtors allowances to sales. So you need to close this off. So debtors allowances will now be closed off because you have a debit total or balance. You take it to the credit side and then you take it to sales. And I'll show you now, nice with an example, how it works. Why do I record debtors allowances separately? I want to see how much my debtors return to me. If I have a very big amount in debtors allowances, I want to see it because it probably means that I'm selling bad quality stock, or I'm delivering the wrong stock to the debtors, or the debtors are they're not happy with the stock that I do deliver. Maybe wrong colors, whatever the fact. There can be many reasons for high debtors allowances. Hopefully that is as low as you can have it. So again, step one, debtors allowances goes to sales. Step number two, sales, your very top nominal account, the biggest amount hopefully, that needs to close off to your trading account. Now remember, sales will be on the credit side. You take it to the debit, take it to trading account on the credit. I'll show you now. Then close off number three, your cost of sales to the trading account. Now you have two things in the trading account. You have your sales on the credit side and you have your cost of sales on the debit side. What do I need to do now? You now need to see that I have a bigger amount in sales, so therefore did I make a gross profit? Hopefully you did. Otherwise you're buying stuff and selling it for cheaper, and then the business won't survive. So therefore your sales will be bigger than your cost of sales. You work out your gross profit for the year, and you'll take this profit to then your profit and loss account. That will be your step 4. Trading account to profit and loss. Now, step number 5 can have quite a few T accounts. Step number 5 will be, let's quickly open, close it. Step number 5 there, close all your income to the profit and loss account. So again, all the income on the credit side needs to be going to the debit side and then transferred to the profit and loss on the credit side, step number 5. And you can have 5 incomes, you can have 10 incomes, you can have 2 incomes. It depends on the company or the business. Then the next step, number 6, close off all your expenses. So remember, expenses on the debit side, transfer to the credit side, take it to profit and loss on the debit side. So again, in your profit and loss, all your income will be reflected on the credit side. All your expenses will be reflected on the debit side. Now guys, hopefully you still know what type of expenses I have, what incomes I have, and distinguish between them. I can give you one column and you need to go and see what are my income, what are my expenses. Now, after all your income and expenses are taken to your profit and loss, you need to go and calculate your net profit. That's step number 7. Your net profit needs to be calculated, and this profit belongs to this owner of the business. Remember, we are busy with the sole trader. So this profit, this net profit, goes to the capital account of this owner, and it will increase his capital in the business. But remember, if he drew money during the year, he'll have drawings. And this drawings also needs to close off. So again, drawings goes to the credit side, goes to capital on the debit side to decrease his capital that he's got in the account. And then all the closing transfers are done. Now, let's look at a nice example. So I'm giving you the final accounts, just quickly to give you a bit of revision. Trading account, the profit and loss account. Again, balance sheet account section will never close off except your drawings, and all your nominals will go to either the profit and loss account or to your trading account. Now, the example I'm giving you is the general ledger of Gr Traders. Now, Gr Traders has got capital currently of 500,000 Rand. Remember, capital and minus plus account. Also very good for the owner to have a nice capital amount in his business. Let's go and look at the next one. Your drawings, I gave it to you. Drawings is a plus minus. And remember, when do I take drawings? It's my very last step in my closing transfers. Now, my next tier account will be sales, debtors allowances, and cost of sales. Now, I group these 3 together because they go together. This is my trading side of the business. So the very first step, remember your very first step? Debtors allowances. What do I do with debtors allowances? I need to transfer the debtors allowances to sales. So how do I get this debtors allowances, which is an expense? How do I get it 0? I need to go and take it to the other side. I take it to the credit side, and I will take it where to? I'm going to take it to sales, and therefore sales will go down on the debit side. Debtors allowances will go down on the credit side, and it's 30,000. Now that's half of step 1. Where do I take it to sales? And then I will go and write your debtors allowances. I'm going to abbreviate. It's your GJ, and therefore 30. Now there is step 1 done. Good. Step 1 completed. What do I do for step number 2? I now need to finish off sales. I need to clean it and take it to my trading account. Now, sales, remember, an income, good for the owner, good on the credit side. What is my biggest side? My biggest side is the credit side. Add it up. You get 950 here. Where do I take it? To the other side, 950. Now, how do I close it off? I now need to get the difference here. 950 minus 30 gives you 920. And where will I take this 922? I'm going to take it to the trading account, GJ. So let's go to my trading account. So in my trading account, we'll normally call it an F account, your final accounts, your final account number 1. And we will go here. Remember, it's also an owner's equity account. So it's a minus plus. We take the sales here, we say GJ, and therefore sales now closed off. Step number 2, 920,000. So we've done step 1, we've done step 2. What's step 3? Cost of sales. Where do I take cost of sales? Also to your trading account. So let's go and look at your cost of sales. Let's just move this down. There's your cost of sales. Remember, it's also a bad one for owner's equity. So your cost of sales for 20. What do? I take it to the trading account. Please don't abbreviate like I'm doing it. You need to write it out in full. How much is your cost of sales? 420. And now, where do I take it? To trading account. What side? I have a credit here, so now I need to have a debit in my trading account, which is here. I'll go and write cost of sales, GJ, and I have 420,000 Rand. Now, step 3 done. What's step number 4? I now need to go and calculate the gross profit and take it to profit and loss. Now, let's look at your trading account. Your biggest side is your credit side. You have 920. So 920 on the credit side. On the same line to the other side, you should have 920 to close this trading account off, to finish it, to clean it. Now, what do I need to do? I need to say 920 minus 420. And then you will see that you will get an amount of 500,000. Now, where do I take this 500,000? Where does trading account, step number 4, where do we close trading accounts off to? I take it to the profit and loss account, GJ. And therefore, I'm going to complete step number 4 now, and I'm going to say trading account, GJ, and I'm going to say it as 500,000. Now, step 4 done. Now, what's step number 5? I need to take all income to my profit and loss. So let's go and look at all the income accounts. I gave you a few. Here's rent income. Is this an income? Yes. Fee income? Another one. How do I close both income accounts off? I need to take it to the other side. So I can total it like so. Take it to the other side. Take it up. And where will I close it off to? I'll close it off to the profit and loss account, GJ. Same with the fee income. I take it to the other side. I can do it short way around like this. And then I can just say, I'm closing it off like so. And I can say profit and loss. And therefore, I have 2 debits. Do you see this is a debit and this is a debit? So where do I take it? I need to take it to the credit side of your profit and loss. So I'll have 100,000 and 250,000. I'm just doing it together. You should actually do it one by one. Rent income, I'm just trying to save a bit of time. And then also fee income. And there's your incomes closed off. Let's quickly do step number 6 before we take the add. Let's look at your expenses. We have 3 expenses. All your expenses shown here on the debit side. I need to close it off. So I'll close it off to the credit side. And I take it to profit and loss. You see it's a credit. For every credit, we need to have a debit. We're taking the 120, as you can see, to the debit, to the credit side. And then profit and loss will then be your debit entry. So 250, 120, and your consumable stores, which also plus minus, will have to go to your profit and loss, GJ, of 50. And then remember all 3 amounts. 50, 120, and 250. So we can go here into your profit and loss and say 250. It was 120 if I'm not mistaken. Let's just double check. Don't want to rush too much and make mistakes. It's 250 and another 250. So it's, sorry, no. Let's quickly double check. Your expenses, it's 250. And 120, yeah. So 250, 120, and your 50. And then what do I write? I need to go and write your salaries. I have to go and write water and electricity. And I need to go and write consumable stores, all 3 GJ entries. And that is step number 6. So guys, I'm going to continue with the last 2 steps after the ad. See you now. Okay guys, let's continue and look at the profit and loss and finish your last 2 steps with your closing transfer. So remember, your profit and loss, just like your trading account, will be a final account. We'll call it F2. And it's also a minus plus account because it's good for my owner. If I have income, it's very bad for my owner when I have expenses. So he'll be unhappy on this side and happy on the credit side. Now, step number 7. All the income and all the expenses are now reflected in my profit and loss. Now, I still have the profit and loss and it falls under nominal section. I still need to close it off. Now, how do I close it off? Remember, profit and loss needs to be closed off to capital. Now, let's go and look at it. Very easy. You can see that your credit side here is bigger than your debit side. Now, if you add it up, you'll have 500, 600, 700, 850,000, as you can see. And now, what do I do with this 850? I take it over to the other side. I say 850,000. And now, I need to take this 850 and I need to go and minus. So I say 850,000 minus 50 minus 120 and then minus another 250. And then you will see that you will get 430,000. Now, a trick on the calculator, if everything is 0 here, you can just hide the zeros on your calculator. You do save time and then you can work a little bit faster. Remember, accounting, working fast. You need to work at a very fast pace to finish the paper. If you don't finish the paper and you do get everything right, you're still not getting full marks. So work very fast. Now, where do I take this 432? I'm going to take it to your capital account. And this is step number 7. So 430 needs to go to capital. Now, here's my capital account. And the owner is happy because he got 430,000 Rand as profit for the year. And therefore, his capital goes up because we have profit and loss for the year and it's more. Now, that is step number 7, your very last step, drawings. An easy way to close off drawings, just draw the 2 lines and say, I'm going to take this drawings to capital at the end of the year. Please always remember to write your dates in those columns. GJ 260. I didn't give you dates for this example. So 260, this is my credit. Where's my debit? Here it is. So I need to now say 260,000 GJ, and that will be my drawings. Now, what's my biggest side again, guys? I add it up. I get 930. And then I get 930. And then I can go and calculate my closing balance that I need to calculate, carry down, and then brought down. So again, if you go and calculate it, let's go and check. I have 930 minus 260. And then you will get your closing balance of 670. And through running this business, the owner increased his capital, as you can see, from 500 to 670,000. And he took some of the profit for himself. Now, hopefully you'll remember all these closing transfers because now it's time for you to do a few closing transfers alone. Now I'm giving you this question, and the very first question is complete the trading account with figures given at the end of February 2016. And yeah, I gave you all the figures at the end of the year, and now I'm going to give you 3 minutes to quickly calculate just all the gross profits for this year in your trading account. So your 3 minutes will start now. Okay guys, I hope you got the trading account right. Let's go and quickly check what you should have used. You should have used the debtors allowances and the sales and the cost of sales. Now, let's go and look at your trading account. I think it's on the next page. There it is. So your trading account, just let's quickly number it. Remember, it's a final account. It's your F1. And now, what's your very first step? You need to take your debtors allowances to sales. Now, how did I get this 550 here? Remember, you had your 500, and you minus your debtors allowances, which is 6,500, and then you got your answer of 550. So actually, you did your step number 1 and step number 2 here. Now, remember, I don't need to give you all the tier counts. You need to know that your debtors allowances will go to the credit side, will decrease your sales on the debit. Your sales need to now balance off and close off to your trading account on the credit side, and that will be your net sales amount. So your net sales will always be minus your debtors allowances. Now, what is your next one? Step number 3, you have to go to the other side of trading account at the end of the year to go and calculate the cost of sales, or not calculate it, but close off the cost of sales to your trading account. And remember now, your sales was 550, your cost of sales 320, and now, what is step number 4? So let's just quickly make a note here. This is step number 3, and again, these two were step number 1 and 2. What's step number 4? I need to close off this trading account. How much profit did I make? Now I need to go and check. So therefore, if you go and look, the biggest side will be your credit side. You need to go and add it up. You'll get 550. What's my next step after closing off? I need to take it to the other side. There it is. And then, how much profit did I make? If you go and say 550 minus 320, you should get a profit of 230,000. And where will I take it? I will take it to the profit and loss account. So let's see. Your very next question is, I'll show you the question. Complete the profit and loss account with the figures given for the year ended February 2016. Now, remember, just to close off your fourth step, remember your trading account will go and be reflected on the side, and then remember F2 will be a minus plus, and I'm going to give you a tip. All the income goes on the credit side. Now I'm going to give you that list, and this is a tricky list, and there's also a nice trick in this list. So if you go and look at this list, you need to go and now close off all of these accounts. I'll move it down within time. So start with the bad debts. You need to close off all of these to the correct side of your profit and loss account. I'm going to give you 3 minutes to do it quickly. Good guys, let's go look at your bad debts quickly. I'm just going to show you whether it's an income or an expense. So your bad debts, an expense on the debit side, commission income, an income. Discount received, an income. Insurance will be an expense on the debit side. Interest on fixed deposits, an income on the credit side. Packing material, an expense on the debit side. So therefore, let's go on. Rent expense, expense. Rent income, an income. Stationery, an expense. Bad debts recovered, an income. Trading stock deficit, an expense on the debit side. Consumable stores on hand, no entry because it's an asset. And then the last one, wages, an expense. Now guys, let's go and look at your profit and loss T account and let's close off. So these will be steps number 5 and 6. And as you can see, it's major steps. So you'll place all your income on the credit side. All your income normally goes to the credit side, as you can see. Hopefully you got all of them correct. And you don't need to rewrite the date, as you can see. So let's do the last few income. And as you can see, all the income goes to the credit side. But now, all your expenses will be listed February 28th. And you'll list all of them here on the debit side. Your bad debts, your insurance, the totals will all be just transferred here. Your rent expense. Let's quickly finish up. Your other expenses will be, let's just quickly check here. Your stationery, your trading stock deficit, your wages, all of them will be shown on the debit side. And then what do? I need to take the bigger side, which will be your income, take it over to the other side, and then I can go and calculate my net profit and loss. And I see I've made a small mistake here to finish off. It doesn't go to profit and loss. It needs to go to your capital T account on the credit side. And that's how you close off up to number 6. And just remember to take your drawings to capital at the end. Now guys, go and study these steps. The better you know the steps, the better you can answer questions. I hope to see you soon. Bye-bye.